Boom or bust? What's next for the US housing market? This is Macro Matters and we're talking about housing. This summer's property market has been anything but hot. Home prices continue to rise even after a recent pickup in inventory, and would-be buyers aren't biting. Potential buyers are deterred by high mortgage rates and anxiety about the economy. So is the US facing a housing affordability crisis? Odeta Kushi is Deputy Chief Economist at First American. So Odeta, home purchase contracts in the US were cancelled at a record rate for July. Why are buyers getting cold feet?
I think it's a combination of affordability constraints. Mortgage rates are still elevated, house prices are still high, even if the growth rate is decelerating. And then, of course, they're feeling a little bit jittery about the state of the broader macroeconomy and the state of the labor market. While the unemployment rate remains low, the job hiring rate is at about 2013 levels. And so there's some sort of jittery behavior on the part of buyers, just given the state of the broader economy.
While mortgage rates are holding at the lowest level since October, are they low enough to lure some hesitant house hunters off the fence?
Lower mortgage rates are always welcome news in the housing market, but as we know in the housing market, buyers are also sellers, and a lot of sellers are locked into rates below 6%. And so rates haven't moved meaningfully lower enough to get a lot of those sellers off the sidelines. And it's helping to move some on the margin buyers back into the market, but not enough to really improve sales activity meaningfully.
Well, sales of previously owned US homes rose modestly in July, but what is needed for a meaningful recovery?
I think it's a combination of factors. There's not just one single solution to the housing market issues. I think it has to be a combination of continued higher inventory to give buyers and sellers more choice, lower mortgage rates, and of course, house prices outpacing house price growth will allow affordability to catch up.
You mentioned that the labour market is one of the things weighing on the housing market. What's the outlook going forward?
I think we can expect the labor market cool down to persist. And unfortunately, this does limit sales because, of course, job changes is one of those lifestyle triggers that could prompt a move, a sale in the housing market. And if we're not seeing employers hiring at a faster clip, then that could hold back housing market activity. And we believe that it is.
So buyers might see some mild rate relief if the Fed continues to cut interest rates. What's your easing outlook for the US Central Bank?
Well, right now, markets anticipate the Fed to cut at their September meeting and maybe again before end of year. I think it's not a foregone conclusion that we'll see rate cuts this year. It really depends on the outlook for inflation and the labor market. But certainly, if we get more confidence from the Fed that there will be rate cuts, we could see slightly more lower mortgage rates by the end of the year. But I'm not really counting on lower mortgage rates to really sustain housing market momentum in the second half of the year. It will continue to be some of these life events that are driving sales for the remainder of 2025, but lower mortgage rates will help.
So overall, what's the next outlook for next year for the housing market? Do you think it is boom or bust?
I think it's somewhere in between. I think that next year will be the start of a new real estate cycle, really a housing market in transition. If we get slightly lower rates, income continuing to outpace house price growth, we might get some buyers and sellers off the sidelines, starting to transact and really settling into a new normal in the housing market.
That was Odeta Kushi from First American. Don't forget, you can watch more videos on Reuters.com.